Good morning, good afternoon, good evening, wherever you are. I'm your host, FD465.tv, and welcome to Week in Focus, where we are looking at Kaspa, a proof of work Layer 1 cryptocurrency that implements a novel consensus mechanism called GHOSTDAG, which stands for Grid Heaviest Observed SubTree Directed Acyclic Graph. That's a mouthful, isn't it? But before I jump into the Week in Focus, where we are jumping into Kaspa, please know that I am not a financial advisor. If you do require financial advice, please approach someone who is actually trained to give you financial advice. The information contained in this video is just for educational as well as entertainment purposes. That said, guys, if you are not subscribed, please consider subscribing to our channel. We do rely on you guys helping us spread the word and grow our channel. We are one of the few channels that brings you non-conventional content that you may not find anywhere else. That said, let's come back to our Week in Focus, where we are looking at Kaspa. And Kaspa, instead of a linear blockchain where when two blockchains are mined at the same time, one becomes orphaned or discarded, Kaspa's block DAG architecture allows parallel blocks to coexist, then orders them in consensus. And the key facts here include the GHOSTDAG, which is a generalization of Nakamoto consensus to a DAG of blocks allowing higher throughput. Kaspa had a fair launch back in 2021 with no pre-mine or ICO, and it uses a capped supply of 28.7 billion CAS and proof of work mining model. According to CoinMarketCap, at the time of recording, October 2025, the CAS coin is trading around 5.3 cents with a market cap of around $1.5 billion. And Kaspa is trying to combine the decentralization and security of proof of work with the speed and scalability attributes often claimed by DAG-based or next generation chains. Moving on to key features, the first key feature is block DAG and GHOSTDAG consensus, which allows many blocks per second in a DAG structure rather than one block every X seconds. This increases throughput and lowers latency. Next is fair launch and proof of work mining, where there is no pre-mine or token allocation. Tokens are distributed via mining, aiming for decentralization. Next, it's scalable block rate goals, where the network currently supports block times and aims for high block rates. And some sources within the insiders say 10 blocks per second target, even 100 blocks per second longer term. I don't know where they are now, somewhere in between, I'm sure. It also offers low fees and high throughput through its design. This is because blocks don't get orphaned and mining reward isn't wasted. This design targets efficient use of proof of work. And tokenomics include a supply of 28.7 billion of the CAS coin, a high circulating percentage of 90% plus according to available data, which reduces immediate dilution risks. But there are some caveats though when it comes to risks. Although mining is fairer, proof of work tends to have higher energy and ASIC competition risks, though Kaspa uses K-heavy hash algorithm to mitigate some of the issues. It also is lacking when it comes to developer ecosystem, tooling, and dApp infrastructure, which is still forming. And as a proof of work DAG network, it is novel, so adoption risks remain. While block rate is high, the real-world usage, talking of dApps and smart contracts, is less mature than some smart contracts chains. Competition from many other layer 1s and next-gen consensus protocols, you're talking about proof of stake, DAG, and so forth, are in the market, so Kaspa must prove itself beyond just proof of work to capture real usage and jump on the Bitcoin narrative of, yeah, look at us, we are just like Bitcoin because we are proof of work. It needs to move past that, because that is not substance. Let's move on to the value proposition then for what makes Kaspa potentially valuable. It is decentralized and it boasts fair proof of work as an alternative to proof of stake. For purists who believe proof of work is more secure and trustworthy than proof of stake, Kaspa gives a high throughput proof of work alternative, which means it's better than the likes of your Bitcoin and proof of work layer 1s. It also boasts high speed and high throughput, and if Kaspa delivers on block DAG architecture and high blocks per second, it could handle many transactions, macro payments, faster confirmations, making it suitable for real-time value transfer. And scarcity and fair distribution with capped supply and no pre-mined tokens, the token aligns with crypto native ethos. It also has potential for broad adoption if many dApps, tokens, gaming, talking about the gig economy payments, payment systems, if they are built on it, it might gain network effects and transaction volume could drive value as well. And its proof of work model is a differentiator in the modern world. Many networks, including Bitcoin, struggle with throughput. Kaspa claims to solve that trilemma of security, decentralization, and scalability. No one has ever fixed it, so I could say this is an unsubstantiated fact because I don't believe you can solve it. There are some trade-offs. So in short, Kaspa's valuation is as a fast, fair, decentralized proof-of-work base layer that can scale beyond legacy proof-of-work chains. Moving on to use cases for Kaspa, with faster confirmation and low fees, the Kas token can serve as digital money for micropayments, peer-to-peer transfers, and remittances. Although less mature, sources say Kaspa is working towards layers that support smart contract tokens. You're talking of the KRC20 and KRC721, which I think these are clones of Ethereum. I don't know whether they are live yet or not. And as for gaming and microeconomics, fast block times and high throughput support use cases like gaming rewards, in-game asset transfers, and micropayments. Kaspa can serve as a base layer for further layers or protocols that need assured security and throughput, so it might end up hosting layer 2s or become the infrastructure backbone. Over time, if Kaspa supports richer features, talking of DeFi, NFTs, and so forth, some decentralized applications could deploy on top of it. Some sources mention supply chain identity verification as possible. So the use case spectrum is broad, but as with many chains, adoption and active ecosystem matter more than promise. Moving on to the competitive landscape, and is Kaspa a Ponzi? Yeah, we need to venture into that as well. We don't hold back, like I said. Non-conventional content you may not be able to find anywhere else. If you are watching this section now, please subscribe to the channel. It means you are probably enjoying what we are sharing with you, so please consider subscribing if indeed you are not already subscribed. So the competitive landscape, Kaspa is some of its peers, including other high throughput chains with architectures that also incorporate DAG-based or layered solutions like IOTA, Hedera, and the HBAR token, Avalanche, and Solana, among many more. On the proof-of-work side, Kaspa is more niche because many new chains favor proof-of-stake or hybrid designs. Hence, it occupies a distinct segment, high throughput as well as proof-of-work DAG. That gives it decentralization but also narrower battle space. For example, IOTA focuses on DAG but not proof-of-work in the same way. Others like Hedera use a cancel or permission model which differs in decentralization. Solana is high throughput but uses proof-of-stake, so Kaspa's proof-of-work plus DAG combo is rare. I don't know whether rarity of the technology itself is enough. So, is Kaspa a Ponzi? Let's do a Ponzi check, a quick Ponzi check here. Does Kaspa show red flags of a Ponzi? In my analysis, no clear indication of Ponzi structure, and here's why. You're talking about fair launch, no pre-mine, no larger inside allocation, token as usage, mining rewards, network fees. The architecture is open source, academically referenced. The GHOSTDAG white paper is out there for people to have a look and study if you want to. Value depends on adoption and utility rather than emission, though emissions do exist. That said, any crypto asset that can turn speculative or lose utility, having good fundamentals now doesn't guarantee future success. Hence, Kaspa appears legitimate and far from being a Ponzi per se, but it remains a speculative investment with tech and adoption risk. As for price predictions, short to medium term as well as long term, current baseline, you're talking of 5.3 cents to 6 cents as of late October, with market cap of around $1.5 billion to $1.6 billion. Short term to medium term, talking of between 2025 and 26, if the crypto bull cycle reignites and Kaspa brings meaningful ecosystem announcements, I'm talking of smart contracts layer, more adoption, one modest target might be 10 to 15 cents, although it might get to 25 cents or so by the end of 26 in favorable conditions. A more consecutive case, I'm talking of slowdown in adoption, market flat, the Kas token might stay within the 5 to 8 cents range, although it might spike due to momentum hype or hype momentum. A negative scenario, say market is weak, adoption is minimal, we may see prices of 3 to 5 cents as the range from where we are today going forward. But if the altcoin season comes back, that might change quite quickly. A long term, we're talking of 2028 to 2030 and beyond, if Kaspa becomes a widely used base layer for proof-of-work chain or as a proof-of-work chain with high throughput, many dApps and payment gaming ecosystem building on top of it, then the Kas token could target 20 to 50 cents or more, depending on market size, though that implies multiple X's in terms of where it is today. I'm talking of 3x to over 8x. That might be a big call or a big ask. In an extremely optimistic scenario, I'm talking of massive adoption, mainstream payments and gaming, maybe $1, but that would likely require 100x growth in usage and market cap. So very, very speculative indeed. Conversely, if adoption fails, Kas could remain sub 10 cents for many years or lose value if overshadowed by other chains. My reasonable bullish forecast, end of 26, we're talking of up to 12 to 15 cents. End of 2030, 30 to 40 cents, so 5 to 7x. And the bear market floor through the cycle might be 3 to 5 cents or even lower. It depends. If we have one of those horrible bear markets, that could be the case. Again, these are all speculative. Much depends on crypto macro cycle, adoption, network effects, ecosystem build-out, and how bad a bear market might turn out to be. And guys, I do not currently hold Kaspa and the Kas token, but Kaspa is like a sprinter among giants who are jogging. It's declared it will run a 100-meter dash while the others are still warming up. Proof of work purists look at it and see, yes, this is what we said blockchain should be: fast, fair, and permissionless. Critics look and say, great tech lace, but where is the crowd? Where is the ecosystem? If Kaspa executes, if it builds the dApps, miners stay decentralized, users adopt, then one day you might wake up and wonder why you were living on slow chains while Kas zips past. If it doesn't, it might end up as the chain that would have been the chain, a technical gem with moderate ecological niche but no stadium of users. In other words, Kaspa's foundation is strong, the vision is bold, but the challenge is execution and market timing. If you believe in a blockchain world where proof of work still matters and throughput is crucial, Kaspa is one of the more interesting bets. If you prioritize smart contracts, ecosystem, brand recognition over consensus cleverness, you may look elsewhere because there are better alternatives elsewhere. So for now, strap on your running shoes. If Kaspa sprints, you will want to be in line, but be ready for it to jog for a bit before the real race begins. For those who hold Kaspa, please let us know in the comment section what your thoughts are with regards to the prospects for Kaspa and the KAS or Kas token. Let us know in the comment section. Until the next one, FD for SubTree.tv signing out for now. Bye.